Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, and welcome to the May 17th edition of Basis Loaded with Joe Schmit. I am Joe Schmit. This episode, as always, is produced by Paige Driscoll, and what we do here is break down the latest from the NDPSR report, starting with butter. This butter number coming in at 246.62 is a little bit higher than expected. That is 4.5 over the CME 1-week average of 242.10. Now, we traded only 2 loads on the exchange last week in butter, so not a lot of volume there. Also, not a lot of volume on the NDPSR, short of 2.5 million. So more than 2 million pounds under our expected volume. So all in all in butter, we have a high price, most likely on previously negotiated forward contracts, but very few extra sales based on the CME equivalent. So higher price on lower than expected volume. Next up, in the cheese, we have blocks, 175.24. Now this also is a higher than expected price relative to the CME 1-week average of 167.05. Plus 7 is well above our expected 2-cent positive basis, and we achieved that higher than normal basis with 20 loads traded on the CME last week, so almost 800,000 pounds. We missed our expected volume of 12.5 million pounds by some 300,000 pounds. So even with that weight changing hands on the CME, buyer appetite seems to be limited here on the NDPSR at this elevated basis level. So similar to butter, we have a higher than expected price in the blocks on lower than expected volume. In barrels, 158.92. That represents a plus 4 to the CME 2-week average of 154.60. We traded just a massive amount of weight on the exchange once again last week, and we should take time here to just be appreciative of how important the CME spot market has been lately. Now, a lot of commodity markets don't have a transparent, visible spot market as we're fortunate enough to have here in dairy, and being able to see all this weight change hands on the CME in a public venue, I think is something that is really important. Anyway, back to the volume here, 2.3 million pounds traded on the CME last week. You would expect all that weight trading at the weekly average minus the freight would pull the basis down, and pull it down it did. Plus 4 is at the low end of our expected basis. That extra weight, that 2.3 million pounds, is reflected here on the NDPSR. Once again, NDPSR barrel volume surpassing the 15 million pound threshold and well above our 13.5 million pounds. So all in all, lower than expected price on higher than expected volume in the barrel. In whey, 39.05. That represents a plus 5 to the CME 1-week average. Of course, we lost 2 cents relative to the last NDPSR. And if you wanted to look at the April 29th value of 42.62, the manufacturer had to discount almost more than 3.5 cents to move this week's volume. But move that volume they did. Look at this, just a massive amount of weight moved here on the NDPSR, north of 8.2 million pounds. So almost 2 weeks in one at a lower than expected price, but 8.2 million pounds is a lot of weight. Now, we traded 1.7 million pounds on the CME last week, 42 loads. So that would put us around the 6 million pound neighborhood. The fact that this week's NDPSR came in at 8.2 million pounds would lead me to believe that there was a bulk export sale out of the manufacturer in addition to all the weight that we saw change hands on the CME, and that extra 2 million pounds was probably done at a discounted level, and I think that's why you see the more than 2 cent drop from a week ago's NDPSR level and the 3.5 cent decline from prior week's NDPSR. And then lastly, non-fat, 115.19. That's a -1 to the CME 1-week average of 116.60. I think to start out, we should look at this May 6 number coming in now at 115.48. They revised that over a penny. And in that revision, lowering that price a penny, they pulled out volume. So it looks like around 300,000 pounds they pulled out. And without that extra volume going into last week, the price came down more than a penny. Now this week, looks like we have another bulk sale in non-fat, 28 million pounds on the NDPSR. That's with only 7 loads trading at the CME. So the CME was not the venue of choice for the manufacturer to move extra weight. That was a flat price negotiated sale off of the market. 28 million pounds goes a long way in getting the manufacturer further cleaned up. And anytime we have a big bulk sale, we see this negative basis. -1, of course, is well below our expected 2-cent positive basis. So this is week 2 of 4 for the May pricing cycle. Currently getting a May class 3 of 16.17. Futures currently trading right around that neighborhood, so not a whole lot of meat left on the bone in the May class 3 expiration. May class 4 currently expected to come in at 18.09. If you carry current CME equivalents out through the entirety of the 4-week June pricing cycle, currently getting a June class 3 of 15 even, with a June class 4 of 18.01. So a $3 inverted class 3, class 4 spread. If things hold as they currently stand in June, we'll see what they have in store for us in the weeks to come. Until next week, on behalf of Paige and the entire EverAg Insights team, I'm Joe. Thanks so much. Bye.